the best one, right? So every other one was worse than 99.9%.
Hi, I'm Crypto Positive. If you like this video, please smash like and don't forget to leave a comment in the comments section below. Thanks and enjoy the video.
Can you explain what it means for the United States dollar to lose 99% of its value? Because there's no question that people living, in 1915 or 1917, whatever the year the Fed was created versus now, people are living better. So explain what it means for the dollar to lose value and yet standards of living continue to increase.
Standards of living for the 8 billion people in the world is one question, which we could spend quite a while on. If you trace the cost of a house in Miami Beach in the year 1930, my home has increased in price 305 times in 92 years. Mm-hmm. The formal Bureau of Labor Statistics would suggest that, in fact, the dollar's lost 95% of its purchasing power over that time frame. But the truth is, 305x means the dollar's lost 99.7% of its purchasing power over that time frame. The implied asset inflation rate then is about 6.5% to 7% a year for 100 years. Saifedean and the Bitcoin Standard estimated that the U.S. currency and the European currencies pegged to it have lost about 7% of their purchasing power a year, or expanded at 7% a year for the last 50 years. Right, since Nixon went off the gold standard. But if you look at the currencies in the developing world that are weaker, like in South America and Africa, they typically are losing power at double that rate, so 14%. So what does it mean? It means that if you want to buy an asset and you're a working class person, up until the year 2020, you would have to increase your after-tax cash flows by 7% a year in order to keep up with the rate of inflation. And if you lived in other countries, you might have to increase your cash flows 14 or 15% a year to keep up with inflation. The formal government measures are CPI, but CPI is the lowest possible metric that you can calculate, and it's engineered in order to not go up in price. So the real inflation rate is double or triple what the consumer inflation rate is. And the distinction of why life is hopeless is because the currency is collapsing in value. If you're working class, you can't buy assets. You might be able to buy products and services that are highly manufactured with low energy content in them, but high energy content, unique, scarce assets get progressively more expensive.
What are those then? Because in terms, and I'm just to dilate on this a bit, because I agree with you, inflation is a thing, but it's, compared to 1930, more poor people in America own homes as a percentage of, whatever slice of income you want. So houses might be more expensive, and yet they are also more available to people.
It doesn't feel like a house is available to someone if it's 20% more expensive today than it was 12 months ago.
Yeah, but I'm just saying,
you're working class right now, the house got 20% more expensive in 12 months. So, yeah. So what exactly is making it cheaper in the last 12 months?
I don't know,
but I mean, about
65% of people in America own a house. In 1930, it was, it had to be below 50, probably closer to 30, and we could even factor out the Depression. So something, more people own cars now than they did in 1970. More people go to college, even though these are things that have, gotten a lot more expensive in terms of actual prices, but they're more ubiquitous.
They manufactured more stuff.
Yeah.
Well, there you would say the rate of manufacturing is outstripping the rate of population growth, and therefore they're spreading. Look, more people own a car today than they did during the height of the Roman Empire. Mm-hmm. Yeah, right?
Yeah.
And why is that? Because we manufactured a lot of
cars. We have more computing power than all the pharaohs of ancient Egypt, for sure, right?
So it isn't that there aren't things in the world. Antibiotics exist today, and they didn't exist 1,000 years ago. So clearly people have something now that they didn't have then. But that doesn't mean that the money works.
Right.
That means that antibiotics work, right? We're arguably better at manufacturing and engineering things like bridges and cars and ships and planes and antibiotics than we are at running a monetary system.
Right. So let's talk about what is unique about Bitcoin that allows it to be better than gold? We don't even have to talk about, dollars in fiat currency. What's the genius of Bitcoin that gets us to a place where we'll actually have a good, good money, good currency?
A theoretical perfect money would be an immutable ledger that's mathematically correct. That means whatever your math system is, if it's 100 million coins, 1 billion coins, 1,000 coins, then 10 stays equal to 10. 21 stays equal to 21. So if you had a mathematically correct ledger, it was shared by everybody in the world. No one could corrupt it and change it. If it was run by a deity telepathically in real time that was non-corruptible, you'd have perfect money. In the absence of God wanting to run the monetary system, the next best idea is you create a computer software program that will run such shared immutable ledger. You make it shared and you make it immutable by letting anybody in the world run that software and having all the nodes on the network check each other and kick off the corrupt nodes in order to maintain a degree of integrity and virtue in the system. So Bitcoin is an approximation of a perfect monetary system because it is correct. It has no inflation in it. It's not corruptible because it's decentralized.
And it's governed by these rules that can't be changed.
The rules are what make it mathematically correct.
What was the aha moment for you? I mean, you and your company MicroStrategy are essentially the biggest known owners of Bitcoin, right, on the planet. Where we know who the people are. What was the moment where you were like, this is what I am really going deep on?
I think the second quarter of 2020, the policy response to the pandemic was to lock down most of the economy in the world. Main Street shut down. And the monetary response was to lower interest rates to zero and start pumping money into the economy through asset purchases, and to loosen bank loan lending restrictions, lower the reserve ratio. And that happened everywhere in the world. So we had a massive monetary stimulus while we had a massive fiscal contraction, or what I'll call physical contraction. And you saw something which, I kind of view as perverse, which is the stock market recovered to an all-time high at the time when the economy was the most dysfunctional in our lifetime. And so in the year 2020, you could say, if you were a Wall Street company, and if you did nothing for the entire year, you had the best year of your life, you were up 30%, you made a fortune. And you could have hung out for the entire year on a floaty at your house in the Hamptons, done absolutely nothing, and you're 30% richer. And if you're a Main Street company, it was, first of all, you were almost regulated out of existence, so you couldn't operate, right? Every possible impediment to operation, to doing something, providing a product, providing a service, etc., was thrown in your face. But if you were a Main Street company, and if, despite all the regulations that prevent you from operating, you generated 30% more cash flow, you were the same as you were at the beginning of the year. You got no benefit. So another way to say it is you have to work 30% harder to get nothing in one part of the economy, and you didn't have to work at all to get 30% richer in the other part of the economy. And I saw that as being extremely unfair. What it does is it illustrates the problem with a weakening currency is you're continually transferring energy from the working class to the propertied class. Right, and you're making it exponentially harder for the working class to rise in society or to acquire anything of value, and you're making it exponentially easier for the property class to remain entrenched in power, and that seemed to me to be grossly unfair.
I totally agree with your analysis there, and putting it in that frame is really powerful. Why do you think that Bitcoin is generally viewed as something that elites are dabbling in, that this is something that billionaires and international business tycoons are playing with. Given what you're describing, which I think is accurate, is, this is something that will allow regular people to participate in the economy on the same terms as extremely wealthy, connected people.
I mean, I don't think I agree with the characterization. There's a million different views of what Bitcoin is, but my view of Bitcoin is Bitcoin represents technology to deliver property rights to 8 billion people on the planet.
Yeah, no, I agree. But I'm saying, when somebody like Elizabeth Warren talks about Bitcoin, when the Chinese government, bans Bitcoin transactions and then bans Bitcoin mining, they're not.
I don't think her views are genuinely shared. I don't think she is one person with one set of views. But I think that if you look at the White House, it's pretty clear from the executive order that the view of the White House is that this is profound technology that's good for the civilization. Mm-hmm. I think if you look at Congress and the Senate, I think you've got a remarkable degree of support for this as new technology.
Are you worried about what kinds of regulation? We might say Bitcoin ultimately is immune to regulation, but what kinds of regulations coming out of DC or capitals around the globe do you worry about that you think will either screw things up or really make it that much harder to get to where we should?
I don't really worry about any of it. I think the faster that the society regulates it, the faster it'll grow.
And how does that work?
Because the number one thing holding Bitcoin back is the 17,000 other crypto assets that are unregulated, that are creating noise and volatility and anxiety in the system, and so that's a liability to the asset class. And then I think the other thing holding it back is that there's $100 trillion of capital that's afraid to enter into the network because they see the 17,000 other crypto assets and they're waiting to see how the regulations will evolve.
And I mean, your sense.
Let me give you a different example. Electricity. Okay, so I invent electricity, I bring it to your town, and someone wires their house and they jury rig the wiring, and then your kid comes into my house and they get shocked, electrocuted, and they die, and then 1 week later I turn something on and the house burns down. Mm-hmm. And then someone comes along and says electricity is bad for the human race, we should ban it. And then someone else comes along and says, no, I think that probably we can use electricity. We probably need to have building inspectors to make sure you get a certificate of occupancy before you let people, like little kids, play in the house. Yeah. Right? Am I worried about regulation? I think it's impossible that the automobile or electricity or airplanes would be deployed broadly in society without speed limits, traffic lights, certificates of occupancy, elementary safety. Fire, every single building in civilization, right? There's a fire inspection before you move into it. So will regulation help or hurt in the adoption of buildings and in the adoption of fire? Yeah. So I think the answer is, if you're an engineer, the definition of a mechanism is the degrees of freedom just slightly more than the degrees of constraint. Mm-hmm. But you have to have constraints, because if I have 18 degrees of freedom, the thing flops around. It doesn't work. I need 2, 1, right? I need 3 degrees of freedom. And so regulations are degrees of freedom in order to create mechanisms in a civilization. And right now, we probably don't have enough. And the fact that we don't have enough creates incredible fear and anxiety. And that causes public figures and public investors to pause before they fully embrace the technology.
If regulation, or when regulation comes through, I mean, basically what you're saying is Bitcoin is going to be fine because Bitcoin is real in a way that a lot of other cryptocurrencies will probably be unmasked by regulation.
I have a publicly traded company, right? And you can read my 10K. It's 123 pages, and we spend millions of dollars a year to remain compliant. Okay? And the fact that people trust those filings means that we can raise billions of dollars of capital, and every day hundreds of millions of dollars trades hands based upon the representation of those filings. If we eliminated all those filings, my company would be no better than any of 100 million other companies, and everyone would simply claim the same exact thing. The capital market would dry up. We wouldn't be able to raise money. We would be no more advantaged than a criminal that wanted to lie. In fact, we'd be disadvantaged against the criminal, because a criminal would just claim that they're 10x better and bigger in every way. We would lose our capital, our employees would quit, our customers would depart. The criminal, they would succeed for a while, eventually get shut down, and no one would succeed. It's kind of like asking what would happen if I got rid of every traffic light in the country and I told people you could drive on either the right or the left side of the street at any speed. You think you'd go faster or get there sooner? The answer is no, you wouldn't get there sooner. You wouldn't go faster. Would you sell more cars? No, right? The economy would not work if you had a lack of some normative standards in order for people to engage with each other at high velocity with large sums of energy.
So explain for my anarcho-capitalist friends, do you worry at all that the regulations that will come out of Washington will be will be motivated or effectively written by people who already run the system to their benefit? How do you get to a point where the regulations will actually clarify things and act as a referee, as opposed to just letting the people who are already incumbent firms just continue apace? Facebook has been saying since 2018 they want to be regulated, and Mark Zuckerberg even said, hey, you know what, I'll help you write the regulations because we know our industry, you guys obviously don't. Right. And the regulations will mean there'll never be another Facebook, but we'll be regulated and everything will be okay. So there's a school of thought, public choice economics, which argues that regulations tend to be insisted upon and written by incumbent firms at a time when they, want to be free from kind of market competition. But a larger way, how do we know that the regulations will be beneficial and will clarify things rather than just reward people who are politically connected and can have the government structure markets in their favor?
Well, I suppose if you posit that they're bad regulations, then they'll be bad. And if they're good regulations, they'll be good. Everything that I can see about the regulatory environment implies that the regulators are actually pretty well informed. Mm-hmm. Right? They recognize the innovations that exist. If you parse every word by Gary Gensler for the past 5 years, what he said is Satoshi's innovation is real. He recognizes the existence of decentralized digital property, and that is not a security. He said that there is a place for a stable coin, a digital currency. He's implying that the world would like dollars to circulate on some kind of crypto system. He's implied that trading 24/7, 365 is an advance. Technology is good. And if you offer a security to the general public, you have a duty of transparency to them so they can make a rational decision. So if I do sell you $50 billion worth of dog tokens, and I tell you I've got $50 billion in cash to back them, but in fact I have no cash to back them, right? I've misled you as an investor, right? So all of those things that he said seem to be quite reasonable to me, right? And the thing that's holding the industry back is an ambiguity about the definition of a digital security versus a digital property. And because there's so much ambiguity, you have thousands and thousands and thousands of digital securities that are competing with the digital property. And if you're a rational person, and if you can't distinguish, and you're looking from the outside and you say, well, I'm sure there's 1,000 digital securities out there that are currently unregulated, that are being treated like commodities, I think that would give you pause. Mm-hmm. If you look at the sources of volatility in the crypto industry, some dude creates a dog token, issues it to his friends, levers it up 100 to 1, cross-collateralizes it into another token, trades it at midnight, tweets about it, cross-collateralizes that into ETH, then trades that against Bitcoin. Okay, what could go wrong? So people look and say, well, Bitcoin's highly volatile, I'm afraid to own it.
С тобой так хорошо, с тобой и летом, и зимой, с тобой я бы всю жизнь провел. С тобой